1 in 4 Canadian homeowners would be forced to sell if interest rates rise any higher. And with another massive rate hike coming on July 13th, more than likely at 3/4 of a point, this means tons of Canadians are going to be in trouble. So are we set to see a ton of foreclosures and thus the Canadian market crashing? Well, stay tuned to find out right after this. What's going on, guys? Alex Dunbar here from the Dunbar Real Estate Group and RE/MAX Treeline Realty based out of the Surrey Langley areas. And in this video, I'm going to be covering a few different articles that have been making media headlines. The most popular being that 1 in 4 Canadians would be forced to sell if interest rates rise anymore. I've seen pretty much every major media source in Canada promoting this article. However, I wanted to take a little bit of a deeper dive because I was curious how they came up with these numbers and what the data is to back them. But before I get into it, I'll ask that you do one thing for me, and that's to hit that like button so I can get this information out to more individuals just like yourself who want to learn more about Canadian real estate. If this is your first time on my channel, I make weekly videos covering different topics on the real estate industry here in Canada, as well as showcase community tours across the Lower Mainland. So if that's something you're interested in seeing more of, I suggest you subscribe to my channel and hit the bell so you're notified whenever I put out a new video. But diving right into it, what I'm going to do today is share my screen as I go over a few of these different articles that have been making headlines as of late. So first of all, we've got the big one. 1 in 4 homeowners would have to sell if interest rates rise. ManuLife. So essentially, this article was written based off a survey by ManuLife, and it stated that 1 in 4 homeowners believe that if interest rates were to rise and increase any further, they would be forced to sell their home. But let's take a little bit of a deeper dive. So this data is courtesy of the latest debt survey from the ManuLife Bank. We'll get to that in a minute. Released on June 13th, the biannual survey revealed how interest rates, inflation, and housing prices are affecting Canadians. This was conducted in April 2022. The poll surveyed 2,001 Canadians between the ages of 20 and 69 with a household income of over $40,000. However, they don't specify what the average income was, but I digress for now. So less than half those surveyed felt prepared for rising interest rates, 46%, inflation, 42%, or housing prices, 40%. ManuLife said the data highlights how further increases in the three could be damaging for many Canadians. Now, keep in mind, this was a survey. We're going to get into a little bit deeper later on, but again, they weren't actually looking at data. They were asking Canadians how they felt about these things. So more than 1 in 5 Canadians expect rising interest rates to have a significant negative impact on their overall mortgage debt and financial situation. Nearly 1/3 admitted that they don't understand how inflation or interest rates work. Keep this in mind. Nearly 1/3 admitted that they don't understand how inflation or interest rates work. So if you don't understand how they work, how do you know how they're going to impact you? Right? So keep that in mind for later on. But anyways, I'm not going to go through the rest of this article here, but this is essentially making headlines across all media outlets in Canada. And unfortunately, most people read this and then just share it with their friends without actually taking a deeper dive into it. But that's why I'm here, because I wanted to see if this was actually true, because if this is true, that is a very frightening statistic. So moving on, let's look at the actual survey itself. So here we've got the actual survey by ManuLife. Buyer's remorse, ManuLife Bank debt survey reveals close to 1 in 4 homeowners say if interest rates were to increase further, they would be forced to sell their home. Okay, so a couple of the same things that we saw in the previous article. Over 1 in 5 Canadians expect rising interest rates to have a significant negative impact on their overall mortgage debt and financial situation. As we already heard, as many as 18% of homeowners believe they can no longer afford the house that they own. Not sure where they get that number. Well, obviously they asked them, but anyways. Indebted Canadians are more likely to report that debt is causing them stress, with close to half saying it is negatively impacting their mental health. Completely agree with this one. This makes a lot of sense. Obviously, debt is playing a major role in a lot of people's lives. However, we need to look at the actual numbers. So the housing market is out of reach for most. 2/3 do not view homeownership as being affordable in their local community. That is understandable. Of course, housing prices have gone crazy in the past year and a half, 2 years. So that is completely understandable, especially for those who don't have higher paying jobs or family support. Nearly half Canadians say they would struggle to handle unexpected expenses or are reconsidering summer vacation plans due to affordability concerns, which needs to happen. People need to make lifestyle adjustments. What I'm seeing from a lot of this data is that people aren't necessarily doing those things, and they want to continue to live the same lives that they've been living, whereas realistically, in times like these, with quantitative tightening and other things of that nature, inflation, gas prices, energy prices, grocery prices, you need to make lifestyle changes. And unfortunately, it's very difficult for people who have been doing very well, whether it's with their home, with their stocks, with whatever else that may be over the past number of years, because there is an effect, basically a wealth effect, that people feel that they have the ability and almost want to spend more money when they feel like they're doing well, and the complete opposite happens as soon as things turn around. Anyways, I'm not going to read through this entire thing because it has a lot of the same information, but what I do want to point out is this line right here, which is the most important thing in this whole survey. The survey revealed nearly 1/3 of Canadians admit they don't understand how inflation or interest rates work. Close to 3 in 4 do not have written financial plans, and almost half do not have a household budget. And that's particularly telling when reviewing the results of this season's ManuLife Bank Debt Survey results. So hearing these numbers, how do these people actually know how interest rates, inflation, how all of these different things are actually impacting them financially? Unfortunately, they don't. It's just a feeling. They don't know the facts, and facts don't care about feelings. So surprisingly, actually in a CBC article covering the exact same thing, they had the best quote I've seen to essentially summarize all of this. And that is right here, saying that it's important to remember that the survey is an indication of how Canadians feel about their financial situation rather than a reflection of their actual financial risk. So this is how Canadians feel. It's not looking at their actual financial portfolios and stability and levels of income and other things, right? Unfortunately, the way that you feel can be very different from your actual situation. So the media is pumping out these headlines trying to scare people, saying that 1 in 4 individuals that are homeowners are going to be forced to sell, whereas we have things such as the stress test, which makes people qualify at a minimum of 2% above their actual rate. And for the most part, it's been significantly higher than that because it's either 5.25% or 2% higher. And up until very recently, people have been having to qualify at 5.25% because they've been getting rates in the mid 1% for variable and somewhere in the 2 to 3% range for fixed. Those have obviously changed at this point in time. However, the majority of people that they're interviewing didn't just buy a house last month. So moving on, I thought I would take it upon myself to take a little bit of a deeper dive into the actual numbers regarding mortgages that Canadians have, because I was very curious about what those numbers look like, what the average mortgage in Canada is, what new mortgages look like, the number of people with variable versus fixed, as well as the number of people that actually own their homes outright. So I did come across a pretty recent article, again by CBC, which is pretty impressive because they don't always put out the best information. But if we're looking at renters versus owners by the numbers, 37% of Canadians are renters. 28% of Canadians are homeowners that actually own their homes outright. This means they have no mortgage. This is almost 3 out of 10 people in Canada, and just under 50% of actual homeowners that don't have a mortgage. Then moving on, we see the people that own a home but have a mortgage. This is 35%. This is about 1 in 3 Canadians. So looking at those previous numbers and saying that 1 in 4 homeowners would actually have to sell their homes, like looking at the numbers here, something just doesn't add up, right? And when we look into that even further, we see that 25% of that 35%, so I don't know what the quick math here is, but it's probably 70% of those with mortgages are actually having fixed rate loans. Forgive me if my numbers are a little bit off there, but yeah, no, I'm pretty close. 10% of those people have variable rate loans. And then something else to keep in mind is that people with a variable rate loan, there's 2 types of variable rate loans. You can have static payment or adjustable payment. So those with a static payment, It's only the levels of interest and principal that change. Your monthly payment doesn't, unless interest rates get too high and that your principal actually overtakes the amount of your payments. We haven't reached those levels yet. Could it happen in the future? Potentially, but we're not quite there yet. And that would again depend on your mortgage product and the interest rate that you had. But those with adjustable rate mortgages, people like myself, these are the people whose monthly payments actually change based on the adjustment of the overnight lending rate. So the majority of people aren't even directly impacted, or at least immediately impacted, by the raising of interest rates. So when we really break this down, where are they getting this 1 in 4 homeowners? Again, it's how people feel. It's not an actual good representation of the data. So don't be scared. We're not going to have a massive amount of foreclosures and a market crash and all these other things that the media headlines want you to believe. When we actually dive deep into the data, we can see that we're in a far less scary position than they like to make it seem. And one thing I would like to add here is that I was trying to figure out what the average mortgage size is right now. So I did find some information on the CMHC website. Now, I'm not 100% sure if this is based on the last 2 years or this is the overall numbers for mortgages here in Canada. But from what it states here, it's that the average loan value originated, so the average mortgage taken out by the consumers, is under $300,000 here in Canada. And the average outstanding loan value, or the remaining balance of that mortgage, is $240,000. So there aren't this massive number of people with massive mortgages. They're definitely out there, don't get me wrong, but it's far fewer than the media wants to make you think. Now, if someone wants to correct me here and let me know if this is just over the past 2 years. However, even if this was over the past 2 years, you'd expect these numbers to be higher, as it sounds like new mortgages are closer to around $600,000 that have originated in the past year or so, even though over the past number of years, the average mortgage size is a lot closer to $300,000. And I have confirmed this with several mortgage brokers that I work closely with, but please don't take this as financial advice. I am just sharing opinions and information that has been shared with me. And lastly, I just want to show one more article that I came across as of late, showing that BC is actually at record low mortgages in arrears. So if you're not sure what that means, essentially it's defined as being 3 months behind on payments or more. So if you haven't made your mortgage payments for 3 consecutive months, and there are only 777 mortgages in arrears out of a total of over 711,000 mortgages. Now, this was on March 31st of 2022, and BC essentially had 0.11% mortgages in arrears. The only province lower was Ontario at 0.06%. Now, I'm sure this might be slightly higher now. This is the most recent data I was able to get a hold of. Will this number go up slightly to an extent as interest rates continue to rise? I would think so. However, it's nowhere near any sort of dangerous levels. And if you don't know, Canadians are actually one of the top countries in regards to paying their mortgages and not missing payments. I don't have the data in front of me, but through speaking with many people and coming across many articles, it has become very apparent to me that Canada has some of the lowest mortgage delinquencies in essentially worldwide. But that's about gonna wrap things up for today's video. So please, when you see an article like this with a catching headline that is shocking or scary or fear-mongering, do a little bit of your own research, click and read the article, see where the information came from. Obviously, you're not going to be able to do this with every single article. However, what we need to do is stop sharing disinformation. The more that we push this information out, the more it frightens people based on essentially unrealistic facts or lack thereof. What we need to do is use a little bit of critical thinking, a little bit of our own due diligence, and not just believe these things based off of a headline. Because keep in mind, the media is paid based off of viewership. And how to get viewership? Clickbait headlines. Now I know I'm obviously guilty of this as well. However, I'm just trying to draw attention to actually watch my videos, and then I provide you with value and information. And I support all of it with data. But anyways, if you did get any value from today's video, all I'll ask is that you hit that thumbs up button. And once again, if you are interested in seeing more videos just like this one in the future, I suggest you subscribe to my channel and hit the bell so you're notified whenever I come out with a new video. And lastly, if you are looking to buy or sell in Surrey, Langley, or the rest of the Fraser Valley, you can scroll down and hit the first link to book a call with me at your earliest convenience. Thanks so much for watching, and we'll see you in the next video.